So I just made it back from the mountains where I spent a couple of days, and now back in the Italian bustling city life, which you probably can hear behind me. I hope the noise level is alright. And this video will be my takes around the tech crackdown in China. We have a couple of things that are happening currently with, for instance, after Didi IPO, we have the news that there's a crackdown on Didi happening, and yeah, lots of fear, uncertainty and doubt, as always, around Chinese stocks. So I give you, well, kind of my personal experience of launching kind of a tech company into China, and also what regulation means in China, and also how to think about it from an investment perspective, and talk about a couple of examples, and trying to do this one kind of in one take here, not so much cuts, so more kind of digging into my brain here, what I can say like ad hoc without too much of a further reading into it right now. And that's actually similar to something that I've just done over the weekend with my patrons, where we actually did, that was a 2 hours deep dive into the NIO business case that I've done so far. So whether NIO could actually become still a 10x from here, and I gave my answers to that on the valuations, also the business assumptions and so on. So if you're interested in that, just make sure to become one of the patrons. You can follow the link then. There is still the link to this YouTube video. It was actually live recording, so there was Q&As, but actually what I've done now, it's that I've uploaded it so everyone can still see it afterwards. And actually next week I'm planning for the patrons that have the community feature that they can also do a Q&A with me about my personal stock portfolio, but also some stocks around that we are investing in here, and yeah, just pick my brain whether or not some of those investments are good or bad. Anyways, back to the tech crackdown, and I think it's actually kind of a threefold issue. So first off, we had the big problem around the Ant Financial IPO, and in general it's basically that the Chinese government really wants to regulate areas like fintech that are really crucial to the safety and the healthiness of the Chinese economy, and it's usually all around stability. I mean, you have this picture in China of the harmonious society, and it's all about whether or not you have a stable, not only economy, but also society. And there is a big issue in China with, for instance, the bank loans, the housing sector, which has been screaming bubble for years. And so it just makes a lot of sense, in my view, that the Chinese government or the regulators, not the government itself, maybe more the regulating bodies, but obviously, yes, following the legal aspects there, that they want to have a really tight grip on, who can actually lend money to whom, and what are the lending rules and so on. So that was kind of, a bad spot to pick for Jack Ma, to be honest, and I think possibly the IPO and also his speech that he has held, like just timed around this IPO, that was just not the smartest thing to do, to be honest. And it shows that even a large company like Alibaba and a founder like Jack Ma, he's not influential and powerful enough in China to do stuff like this. And so that was kind of, for me, it wasn't so surprising to see, actually, at least not that this would happen, but like the way it was dealt with in the end wasn't too surprising, if you know how important this harmonious society and financial aspects and the healthiness of the economy is in the end. Another point is the hammering down on something like the anti-competitive practices that we see with companies like Tencent, for instance, Meituan, a company that I'm invested in actually, and but other companies like, for instance, Pinduoduo, who are heavily relying on, for instance, undercutting their competitors, mostly by either subsidizing the deals that they're having, sometimes making sales below the actual cost in order to win clients. And there's just such fierce competition in China. So that's usually just how it goes, that, well, you have so many competitors, and thereby everyone's trying to get as much market share as possible. And there's also lots of money, especially in the venture capital scene, but also in the private equity space in China. So lots of money is being thrown at customers, and that's also, quite frankly, why customers in China are quite, let's say, spoiled in a way, because they get lots of huge deals when shopping. And the Chinese government is obviously looking, or the regulators are obviously looking into this area as well, because they also want to have fair competition. And to be honest, like, this is where my personal experience weighs in. When we founded our e-commerce app, cross-border selling to Chinese consumers, I obviously also had to read the legislation, the rules, all of the guidelines around e-commerce in China. And to be frank, those rules, they are pretty much similar to what we have in the West. For instance, there are guidances or guidelines which tell you how you can advertise. So for instance, in a medical sphere, you cannot just say this product promises to make you healthy. Actually, that's, in most cases, that's forbidden. You're also not able to, that would go maybe too deep, but you know, the way you can advertise your products or advertise against competitors, it's pretty much regulated. And here's the thing, like in China, those rules, they exist, and everybody knows it, every entrepreneur knows it. And so for me as a foreigner doing business in China, that was kind of a big thing, because I always needed to be compliant if I enter the market, because otherwise I know I will face some legal issues and possibly the business model will never work. And in China it's kind of similar, but of course if you're a domestic entrepreneur, then you also know that there is this black box and this gray space, you know, as long as you're not big enough, nobody will care, or at least your competitors are doing it the same thing. As there are so many companies rushing in one industry, there is, you know, just such a fierce competition that you have no second to think about whether or not you're gonna, you know, abide and comply with all of these rules. So basically everyone knows that these rules are existing already, but they're still breaking all of those rules. And now it's just the time when the regulators are coming in and they're just basically saying, you know, we have these rules in place, but you're not adhering to it, so we need to punish you. And that's, you know, just this the second aspect where the regulators are now coming in. And now the third one, which is actually happening now with Didi, is about collecting of user information and data usage of tech companies. So it's basically those three areas that we are seeing that now actually the law is being enforced. And if you want to, you know, find the guy, the person, or the one who's responsible for all of this, it's certainly not the Chinese government, because the rules have been clear. So it's basically, of course, the companies that have been breaking the rules, and everybody knew it. And in a way, usually in those IPO prospects, they are listed there as some dangers that the Chinese government could enforce rules like that, or they could deem that they are not compliant with such and such. And now it's happening, so that's why you always need to kind of read the S1 filings, for instance, the IPO prospects, or the listing prospects of the companies whenever making your first investment, for instance, in a Chinese company, but actually any company, even a US company. So I think it's kind of just wrapping up here with the notion that China is this kind of third world country where there is no rules or no justice and no legal system, are just wrong. And those rules, they're existing. But the question in China is always will they get enforced? So I always compare this kind of with the yin and yang sign. So in the yin and yang sign, you have some part of which is white colored and some part which is black colored, and within the black part there is also this white dot, and within the white part you also have this black dot. And that's basically meaning that there is always kind of an ambiguity in China. So that there are some things which you should comply with and adhere to, but still people are not doing it unless it's getting enforced. And now basically everyone is kind of asked to play by the rules and play by the book, and that's a process that is happening. Now what is an interesting problem now is obviously how will Western media deal with it, and also how could this be an opportunity at the same time? Because now, of course, the timing is really odd in terms of for the Didi IPO. And personally, I haven't covered the Didi IPO yet on the channel here, but that's mostly because I'm not considering to investing in it. Because frankly, I don't invest in companies that are already valued so high. So I do just think, without doing any further diligence here, that this company possibly doesn't have as much upside as I usually want to see with the companies that I'm investing in. So makes it a really tough decision to allocate company there instead of allocating it, for instance, with NIO or with Xunlei or with SAP Health and so on, which I think have a much longer way to go in case that the investment thesis plays out. But anyways, yes, the timing is odd here, and that's maybe, well, we can speculate about why the regulators are stepping in now. Maybe because there was some event happening in the background which we're all not knowing about, but maybe also because they thought well, now that the company has gone IPO, then it's now the least vulnerable if we kind of now break up with their business model in some cases. But not every company that will now get some investigations by the investigators and the legislator here, not each of those companies will face issues on the bottom line of the business. So usually I like to talk about Meituan, where I think that yes, they use some of these let's say sales enhancing methods in order to win customers, to offer them deals and so on, and surely they have a huge market force and power. But there's also Ele.me, like the Alibaba-backed venture in this area. So Meituan, for instance, is not a monopoly, certainly. And at the same time, I think the bottom line of their business will not get impacted. Like if each and every of the competitors needs to cut back on such customer acquisition methods, then Meituan surely will stay there and just still equally kind of thrive and has their customers. So that's a company where I'm particularly not so worried about. Where I would be worried about is a company like that I think heavily depends on such stuff like group buying, like Pinduoduo, which is the entire business model is just around selling as low as you can by pooling together lots of groups, making it entertaining to buy, which is in essence kind of a disrupting business model for sure. But there are also lots of issues with this business model, and also on the financial side. So that's also one reason why I've never invested in Pinduoduo so far. And I'm not saying that they will not be doing well in the future, but I do think that if we think about companies which will have an issue with this investigations and so on, in my point of view, it will be Pinduoduo. Another interesting company here to talk about would be maybe Huya, and also Douyi to some extent, which are live streaming platforms, mostly in the area of gaming. And now obviously there might be a talk around that these two companies they want to merge. So Tencent is a shareholder of both of those companies and wants to merge them. They would then make up 80% of the entire market. So I think, and we actually had, I saw some news today by Reuters that there are some insiders saying that possibly this merger will not happen. And I would say yes, this is really unlikely to happen, and I still think that this might be an opportunity somehow. So for instance, for Huya, like I just noticed after talking the first time in my last videos about it, that it's interesting to see that 30% of the float of the company is actually short, so that's quite a big amount, and yet the valuation of this company is really low. I mentioned like how it reminds me of Futu and Tiger Brokers, because both of the companies trade together well below 10 billion in market cap combined. So I do think even in the case that Huya and Douyin won't merge, so what is the issue with those companies? Still, the market cap is still very low. We don't need them to merge in order to have a fruitful business in China. So that might be actually an opportunity where all this talk about that the regulators come in and not allow this merger, for instance, may have depressed the share price. But if you ask critically around whether or not this should actually have an impact on the prospects of this company, I'm not so sure about that. So currently I'm still not considering to, let's say, buy any common stock of, for instance, Huya, as I mentioned before, like maybe some options play around this company might be an interesting short-term trade. And I'm still not convinced to buy some common stock here, mostly because I haven't done as much due diligence on this company, and second of all, because there's always the opportunity cost, and for 2021 I really want to focus my free cash that I have on opportunities, as few opportunities that I can actually allocate the cash to, because there's always opportunity costs involved. Like, can Huya, for instance, really outperform NIO in 5 to 10 years as an investment? Can it really be better than, let's say, if Xunlei and Zepp Health finally take off? And there, I think, with Xunlei and Zepp Health, those companies, they have far more revenue opportunities and different kind of markets to tap into, whereas Huya, not so sure right now. The valuation looks really interesting, but that's more like kind of a technical trade now, seeing the current tech crackdown as an opportunity there. So in general, these are the three forces that are coming in, that are actually also even different bodies on the Chinese legislation side that are investigating in. So the first one about fintech and the Alibaba and Ant Financial IPO, as well as the crackdown on monopolies and anti-competition, and also now the one about data and information. These are different bodies handling that in China. So this also tells you that, for instance, maybe in the Western perception of how the financial media is reporting around it, maybe they blow it up a little bit too much. Yes, the timing is kind of unfortunate here, but really ask yourself the question critically, like on the bottom line of the business. Fundamentally, will this business still strive in a context where those regulators come in and they guide the way to basically making it impossible to not follow the rules anymore, to not being compliant with some of these rules? But just going back to that, these rules have been in place always. The entrepreneurs, they knew it, the companies knew it, so there's nobody to blame but the management and the companies, and maybe the fierce competition in China, which makes it necessary for these companies to operate like this. So these are maybe the first ideas about how to think about this. As mentioned, just picking my brain here on this idea so far. And then possibly I'm going to follow up a little bit more deeper and looking on each of these companies. Maybe also talk about Didi, despite not investing into that, but maybe for other companies like NIO, I do not expect really any implications on that on the business model side for now. That could change, of course, in the future, but in case that there will be a sell-off in Chinese equities based just on this news, you should ask yourself the question if this sell-off is actually justified or not. And in some companies it may be, in some companies it rather doesn't make any sense. So thank you guys for watching, I hope you enjoyed it, and yeah, see you in the next one.